The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. Can everyone see my screen and hear me? Somebody just wants to type in a quick yes or a Y into the questions box. Thank you, Fred. We'll go ahead and get started. Sorry for putting out a link so late. I forgot that it was my week for the Beginner Circle webinar, and I had already told Garrett that I would do the Stockwaves Charts of the Day video, so I was finishing up that post. And then saw that nobody had posted a link yet. So we'll try and get to everything and still get you guys out of here by about 6 and then get the recording posted later. So I posted a nice beginner circle post earlier today. Maybe I should copy it and put it on the Market Pinball Wizard Beginners Forum. But went through what we usually do by degree, but kind of broke things out. Because, a lot of times I use color coding to try and show different things in a lot of my smaller degree charts. And so sometimes people get confused that I'm looking at those as alts. And then sometimes I will put on a different color as a variation of those smaller degrees, and that will be an alt, but trying to show what, trying to decode what I'm showing there. So I try and do a lot with different time frames and keeping some charts very, very clean to give you a broad overview, and then getting into the nitty-gritty Elliott wave details on some smaller time frame charts. So at the larger structure, again, we're still looking at this primary wave 5 off of the 2020 lows that does not count well as being complete. It has gotten accomplished enough of what it needed to accomplish size-wise to be all of primary wave 5, which is why we have this alt yellow primary wave 5 here. But I have that faded out because really the Elliott wave subwave count for the SPX itself, as well as for a lot of the key component names and the key sectors, really does not count well as complete. And although this fourth wave came down to the deeper regions of what's reliable, particularly within an impulse, so we do need to consider that maybe this is not going to get 5 waves up, but we can give it the benefit of the doubt because it did hold a fourth wave. So it is a large fourth wave relative to this wave 2 here, but that is still really the best count. So we're looking for a fifth wave up to new all-time highs. Ideally, that's targeting the 5,400 region, potentially stretching up towards the 6,200 region, and that should be a 5-wave move, which I can highlight here. 1, 2, 3, 4, 5 subwaves at minor degree inside the parentheses wave 5. So then when we zoom in, we know that, before we zoom in, we know that roughly we want to see certain proportions for the 1, 2, 3, 4, 5. So we know inside that move that these are going to fill out basically according to Fibonacci pinball. So that means after a wave 1 that might ideally target somewhere close to the 200-day moving average, which is sloping down at the moment and coming right through the 4360 region, that we're going to get a wave 2 that's going to retrace between a 382 and a 618 retrace. And then from there, if we hold that region, we're going to get a third wave, which is ideally going to target a 1382 to a 1618 Fib extension. And then after a fourth wave holds the 100% again, then we get a fifth wave up to either the 1786 or the 200%. And you can see that this shape here gets us to about 5650 if we get this perfect proportions that we're looking for right there. So that's a nice ideal structure. And now, so we know what we want to see for this wave 1. And we also know that our wave 1, unless this whole thing is going to be a diagonal, our wave 1 is ideally going to be 5 waves up. So that's when we come down to the smaller time frame chart and start looking at the structure that we have off the low for that ideal wave 1. So here's our ideal wave 1, our 200-day moving average. Right here, we can brighten that up, sloping down through 4360. And we can see that the initial move off the June low was only 3 waves up. I have that counted as this blue ABC. I use blue because I use blue a lot to imply that the structure is something inside of a diagonal. So this got a wider flat to the 764 for the wave 2. So that's a slightly more bearish variant when this could have been easily all of it at the 618. So I made that yellow, but the structure here, I have a blue ABC up for wave 1, and instead of a normal subwaves as 5 waves up for this third, we have this blue ABC structure because it's a diagonal. So we know that the A wave is usually an ABC move. Sometimes the A wave can be 5 waves up, which is why I have this faded green A allowing for a fade as a B wave. But I think we got high enough that even if we don't get higher to the 4,000 level, for the exact C equals A inside of our parentheses A wave, that we could just count this, the high that we made today, as all of that C of A. I really would like to see one more push higher and maybe even a slight extension beyond that towards the 123.6%, which would be closer to maybe the 40/20s in the S&P chart. If I stretch this out a little bit, then that 1236 shows up. It's all the way at 40/46. All right, I don't want that much extension. So just a little bit past the 100% extension at the 4K region would be ideal. Then we'd look for our normal Fibonacci retrace zone for our B wave. So it's an ABC structure down into the 3890s, down to the 3825s in SPX would be an ideal B wave retrace. And then looking for our blue parentheses C wave up, in this case, ideally targeting the 4165 region. It's a little bit further than the normal 1236 that we look for in a leading diagonal, but we've already exceeded the 764 for this A wave. So especially if we get a little bit higher here to 4,000 and we hold somewhere around the 3860, which would be my ideal, then getting closer to 4160 for that C wave would work pretty perfectly. Then we don't have to overlap with the top of wave 1, but in a diagonal structure, the wave 4 is allowed to overlap. And motive wave will actually yell at you if you don't have it overlap. See, if I move that 4 up just a little bit higher so it doesn't come into the price territory of the top of wave 1, I get this little red exclamation mark where motive wave is yelling at me. A lot of times Garrett and I see structures for diagonals in individual stocks that are what we call non-overlapping diagonals, where they fit all of the characteristics of a diagonal, but the fourth wave just holds at a slightly higher retrace where it doesn't quite overlap. And so we just go into the motive wave settings, we go down here to preferences, and we say ignore issues, and that little red exclamation mark goes away, whether we have it down here crossing into wave 1 territory or not. But the important takeaway, I think, at the moment is that we don't have 5 waves up off the low. We're tracking a pattern to get 5 waves up for that wave 1 of our larger 5th wave. But that is a choppy pattern as a diagonal, and it is started off corrective in nature. While this looks like it might be at risk of being an A, B, and a C wave off the low that could be setting up a more bearish move down, I don't think we really have to worry about that yet, because the way the subwaves are actually dividing fits more perfectly in this diagonal structure. But we do need to see it hold clearly corrective as a retrace, and we are heading into this resistance zone and looking for a roughly 100 to 150 to 200 point fade as the B wave in the normal structure that we should see off the low. John asks, what if this is just an A and a B wave and we're setting up for one more low? The problem is if we go back to this larger structure here, this is too big of a bounce already to clearly count as a 4th wave, and that would already make it, we have 5 waves down in this move. So even if this is a more significant top, we still have a very clearly complete looking ABC structure into the June low. So even if this is corrective, it does not look like it is corrective setting up for a nominal lower low. It looks like if this is more bearish, we should still be getting up towards this 200-day moving average region, but as an A, B, and a C wave up for a larger B wave, and then heading down in a much larger measured move from there. It's hard to argue strongly for just a nominal lower low or even a drop to the 3500s based on this structure, because this does not look like a 1, 2, 3, and a fourth, because this wasn't big enough to be a third wave. This looks like an ABC move. And it hasn't bounced enough to reliably beat all of a B wave, setting up for a bigger bearish move. And there's nothing about the structure that says this should be a fourth wave in the C and it gets a fifth wave down to here and then starts a move higher. So again, my focus is going to be on the structure of this retrace. So if we zoom in even more, actually, let's go over to the ES chart on the Nano tab, and zoom into a 5-minute chart here. So this could be all of the A wave, topped at the high of the day, but ideally that might have just been an extension of the third of this C wave of A in the SPX, and that we hold the 3920s again and get one more high towards that 4010 level in the futures. And then we need to very clearly see an ABC correction that looks like this into our fib support of the 3890s down to like the 3825 level from that 4K region. If we did top today, then the fibs are 3880 down towards 3820 would be the normal fib zone. And this move, instead of this being a micro fourth wave, we could be starting the A as ABC for A, and then a B wave bounce, and then the C wave down for our parentheses B wave into that support. I'm going to get rid of that because we did get that higher high today. Claude, I would like to see this structure continue to fill out to confirm that June 17th was the bottom. June 17th in ES. But again, we only have 3 waves up off that low, and that 3 waves up fits perfectly within this structure as being a part of a leading diagonal for wave 1 of the 5th wave, but we have a lot of work still to do to confirm that. There's a lot of individual names that are looking a lot stronger. There's a lot of things that can be, a small 5 waves up, whether it's off of the June low or off of the May low, or that held higher lows from May, or just have new restarts as a strong 5 waves up from their recent July retraces. But until we see a clear corrective retrace here, things are still in flux. So we are tracking the diagonal structure as though this is the bottom and how this can fit into that wave 1, but we don't yet have a clear structure that says 5 up and 3 down. And because we didn't get 5 up and 3 down for this wave 1 and wave 2, then we really need to see more of this diagonal fill out as the larger 1, 2 to have that high probability confirmation that the June low was the bottom. That doesn't mean that you can't trade bullishly within the structure and hedge when you're looking for a pullback, but it means that we can't set it and forget it and say, yeah, June 17th was the low, let's just go on about our business and not look for confirmation there. Anything that drops below the June 17th low is very difficult to still count it as any kind of alternate wave 4. That would look much more as though the primary wave 5 topped. That doesn't mean that we can't make new all-time highs, but it makes it a much lower probability move in any kind of clear LA wave structure. All right, let's take a quick look at the NASDAQ, but really not much difference in the structure that we're counting there. My micro wave structure is actually on the macro clean tab. It just worked out that way. But looking for basically the same coming fade as this B wave. Can get a little bit higher towards the 12,600 region, but from there we're looking at needing an ABC retrace into the 12,000 to 11,870 region for the B wave to hold inside that third of the same leading diagonal. Andrew asks, what is a 1-2? A 1-2 is just any start to an Elliott wave structure that is part of a bigger motive wave structure in a standard impulse or diagonal. Sometimes we might talk about things as being an A and a B, and that implies that you're going to get a C wave. But most of the time we're looking at things as a wave 1 and a wave 2, and we can just say 1-2 without denoting any specific degree. And then let's take a look at the Dow. The Dow, I think, still counts better like the NYSE as being 1 degree behind the S&P and the NASDAQ. So instead of this being the parentheses wave 4 of our primary wave 5, because of where this hit in fib extensions and the subwaves, it still counts better, even though it dropped a lot deeper than ideal. No, the name of the software is called Motive Wave. Stockwaves is the service that Garrett and I run on Elliott Wave Trader and Seeking Alpha that it focuses on individual stocks. So the Dow counts better as being just the 4 inside the parentheses wave 3, and then getting another 4th and a 5th wave from there to complete wave 5. So it can be a longer term move. Now, a lot of the individual components or some of the bigger large cap names within some of the key sectors of the Dow count better as an ABC move up for wave 1, an ABC move for the wave 3, and then the parentheses 4, and they're looking for an ABC move for the final 5th. So that ABC move that some of those individual names could be the 3, 4, 5 of the Dow. So just something to consider is a slight variation from what we're looking for in just the S&P and the NASDAQ. All right, now let's change gears and take a quick look at oil and natural gas. In the oil chart, I think I shifted to this because this is already looking like the 4th wave. But this can be working on trying to complete a 4th wave in an ending diagonal down. Ideally, that is just completing just the A wave once it gets this 4th and then a 5th wave down of the yellow C, and we get another B wave bounce and a C wave down longer term. So this could be a 4th wave, an alt 4th wave completing here. And so if we get a clear 5 up, 3 down off of this completed C wave, then that can be much more bullish than just looking for a B wave. But this is going to be a very clear, if we get a 5th wave down of the C wave towards the 85 region, that would be a very, very high probability opportunity to go long, even if we're looking only for an ABC up as the B wave, because any clear ABC structure, particularly when the C wave is acting like an ending diagonal, that gives you a very high probability setup for at least a bounce. And just that B wave could easily be a 25 to 30% move. So certainly worth watching that. I think we have a little bit more room for that 4th wave to head up a little bit higher. But 104.40 is the 618 level. 101.60 is the 50% retrace. So it is pretty close to resistance there. I know my futures are a continuous contract, so this drop does not exist in the regular front month. So it is actually closer to the 618 level, relatively speaking. at that 104 if you take out some of that drop with the smaller 1, 2, or A, B, and in the C wave up. But still counts as a fourth wave of C either way. Moving over to the natural gas chart. Nope. Oh man, autocomplete from... Don't want gold yet. We want natural gas. All right, so we got this measured move down from here. Now we're getting another corrective bounce. So far just A, B, and this looks like it's filling out a C wave up. Can be setting up yet another measured move down. It really looks to me as though natural gas, I mean, we completed the fifth wave of the diagonal that we were looking for, the A, B, C up for that parentheses wave 5. That easily completed a larger primary degree C wave. So even though we don't have a clear 5 waves down, I'm seeing this as bearish structure setting up for another drop. So this to me looks like an A, B, and 1, 2. Maybe this is just the third of C and it gets a fourth and a fifth wave even higher. But this is a resistance zone for a measured move that can possibly take natural gas back down to the 4s. So be very, very careful if you are trying to chase this move long. It's a nice bounce, but again, this can easily count as 5 waves up, completing a C wave right into your 1, 2, 3, 6 fib extension. So please be very careful. All right, now let's move on to gold. Let me zoom out here a little bit. All right, so gold filling out the wider primary wave 4 that Garrett and I have been discussing, almost in an expanded flat. This B wave here nearly made a higher high, stopped right at a double top. Counts best as a WXY for the B wave, and we can be filling out 5 waves down. However, the way that this is stretching a little bit, it may be better just to shift this to a WX and then an A, B, C for a Y wave, especially if this is going to stretch further towards the 1650 region, which has been implied by what we've been looking at in GDX. There we go. So I didn't shift it that way at the smaller time frame yet, but we have been looking for this to potentially continue to leak lower. 1665 is the C wave measured move. That's going to be the same if we change this to a Y wave. But the way that this fifth wave of the C is stretching out fits very much with the A, B, and C of a Y wave that we've been following in GDX. And so we're going to go take a look at that in just a minute. Can still get a fourth and a fifth wave down, especially if this is a C wave down instead of a fifth. We can have 1, 2, 3, and get another fourth and a fifth wave down to try and head towards that 1650 region, and maybe even spiking all the way down to 1580, but I would prefer not. Silver, oops, need a hashtag after that, QSI. Gets mixed up with the stock that is called QSI. Again, very similar to gold, can count this as a stretched out fifth wave of the C, but if it stretches any further, particularly if it's going to try and head down here towards the 1690 to 1670s, then it would count better as A, B, and the C wave of a Y wave for this possible primary degree, whether it's a 2 or whether it's a B. Doesn't matter, we still have the same larger corrective structure. But looking at GDX, let me zoom out to the macro. Just find the, there we go, macro clean here. So GDX we're counting as a very, very wide and deep wave 2. into the March 2020 low, and off of there, a big A and a B wave inside the primary degree wave 3. So this B wave, we knew when we were looking for, after this 5-wave up move, we were looking for a corrective retrace. When that couldn't hold the support region, we started saying that this could have been a larger correction for the B wave and started looking at it breaking the October and December and January lows. Since then, we are stretching down as the A, B, and C wave of Y, with the 24 region having a lot of Fibonacci confluence that we will look at on the smaller time frame in just a minute. But from any bottom that we make here, once we drop, if we need any final drops, we'll be looking for a reversal as 5 up and 3 down, for a 1-2 start to what should be wave 1 of the C wave, and a 1, 2, 3, 4, 5 wave up move, targeting the 70 to 75 region longer term. So when we zoom in here on that Y wave down from the X in April, we can see that ABC structure that fills out. This was much less of a bounce here and doesn't fit with that same 1-2 to the downside structure that we saw in gold. So much more clearly an A, B, and a C for a Y wave here in GDX. But we can be in this final 5th wave and in the C wave of that final 5th wave of C, targeting that confluence in the 24 region. Any move over 2630s at this point, and we can at least bounce up towards the 2829 region in a higher version of the same parentheses wave 4, and then try again for the 24 region. It really is going to take a significant move past the 2930 region, or a clear 5 waves up and 3 waves down, to be more than any sort of alt wave 4, and to confirm any bottom in here as starting. Let's see. Let's move on quickly. There's a request for TLT. As always, I'm going to take a look at the 30-year Treasury first before we pull up TLT. And let's first go to our macro chart and see that we have this potential ABC move down from the 2020 high that either is a Y wave or just an initial ABC down off of a more significant high, but due for a bounce. So far, we only have 3 waves up off the low. This could be the 4th wave, an alt 4th wave of the C, and we can drop and get another low in our red wave C. We did hit a 100% fib. The next target, if we can't hold corrective retrace support as the start of a bigger bounce, the next fib level is 126 on the 30-year Treasury, which is the ZB futures. On my system, it is at US hashtag for the continuous contract. So now with that in mind, we can go to the smaller time frame. You can see we have this initial ABC move up, clear 3 waves, 3 waves, and 5 waves to a measured move, and are now holding, trying to hold this nested start for another measured move, which could be the A and the B and the C wave of that red A wave that we're looking at on the other larger time frame chart. But we really do need to see the 137s, and really ideally the 138 region, hold for this nested structure off of that low. If we can't hold 138, then there's next support is down at 135 as a wider retrace from this initial move up. And we can still get the measured move up towards 147s from there. But any failure to hold this 135 to 134 region, and we're looking at that drop down to 126. So now with that in mind, we can take a look at TLT. Again, off of the low, TLT, either we count this as a Y wave, and we're looking at the same A, B, and looking for a C wave up, which might be just the A wave of a bigger bounce starting, or here could be a little bit more bearish as just an A, B, and a C wave structure as a larger 4th, and then trying to get one more low in a more normal C wave down. But the difference in TLT is the only history that we have starts at an all-time low back here in 2004. So from that low, TLT looks very different than the actual 30-year or even the 10-year Treasury coupons or bonds that it is modeled after, and looks like 5 waves up and an ABC or a WXY retrace to a 618 fib at the moment. If this is just a fourth of C, then that drop might stretch all the way down to the 764 at 97, 98 region. But so far, we do have what looks, just looking at TLT in isolation, as a very, very bullish setup long term. Again, that doesn't fit with the treasuries that it is based on, but there's a lot of people that don't look at the treasury charts, they only look at TLT. So that is worth noting. There was a request to look at platinum. Very similar to what we were talking about. I'm going to go to a 12-hour chart so that we can squeeze everything off of the 2020 low onto one screen, but get a lot more detail. So again, we have 3 waves up. That can be a primary wave 1. We had enough of a retrace for this to have been all of the primary wave 2, but couldn't sustain any clear retrace off that move. This made a nominal lower low. We did get 5 waves up from there, but we were very skeptical of that move, of this being the primary wave 2. And so we were looking at this potential for an orange measured move down as a deeper retrace. So that orange measured move, which fills out nicely as an ABC for a Y wave, the measured move targets right at the 618 retrace for primary wave 2, and that allows for 1, 2, 3, 4, and a 5th wave down. This 4 could get more of a bounce and still get a 5th wave down, but the 790 to 785 is still a region of high confluence on the platinum chart. So while it's possible that this is going to try and act like a bottom, I think until it gets over the 960 region, you have to still be on the lookout for a drop down under 790. Claude, TNX is basically just the inverse of the bond chart that we were looking at. I have not updated it, I don't think, because when I started doing the bond coverage, most people wanted to see the actual bond prices and not the yields. But the same A, B, and a C wave filling out, or the WXY that we were looking at on the US chart, but in reverse. So that's this move down here. So same potential for this being a 4th wave bounce and getting one more low, or starting a bigger bounce now, or even starting a move down to new all-time highs as this larger cycle wave 5. Any other questions? Steve, sand is one of the mining stocks that we cover in the mining stock service, or the metals, miners, and agriculture service. So any individual stock names, you can save that for the respective webinars. So I was talking about more general Elliott wave questions, or questions about things that are covered in the Market Pinball Wizard, or the normal market section of the Elliott wave trader service. All right, we'll go ahead and end there, and I'll get this uploaded for everybody, and I will see you tomorrow. Have a great night.